Okay, my people, welcome to the Wealth Group Academy channel. All right, I'm your host, Michael Roberts, for today. We have some pre-NFP setups to look at, and I've been quiet, just looking at the markets. I'm going to start from the dollar index, which is not my usual to do. But the reason I am going to start from the dollar index is just to kind of follow through with the analysis that I've given. Now, the price has done exactly what we've been talking about for the whole week. All right, and I'm going to just recap here quickly for us to look at what, again, the major crux of concentration of the price for 2021 has been within this area of demand. Okay, from the weekly, it's been a large area of demand that has multiple successions of demand moving forward. If I start from where we are here, you can see that price fell into this area from the demand zone on top. And we saw a very strong long here. The price attempted to get to this high point, but we haven't had that yet. Instead, we have a double top here, which to me, I believe the price is going to run past this high. All right, so from the market here that we've been looking at for this year of 2021, we've probably been in one of the more tighter ranges of the years that we've seen. Okay, so dating back from 2015, we've had some large price action in over the years. I think one of the smaller ranges was 2019. That was another year of a small range in price movement. We went from to just under $100, okay, by the end of the year. So 2021 is not so bad. We started off around about 89 right here. We've gone all the way up to 93, so about a $4 range approximately. Now, 2020 was more of a crazier year. We saw a very strong spike back up to 103 before the price pushed back down on the short side. Now, this supply zone again is my concentration of area, because this area right here is holding the price from going any further than cent mark. All right. Now, this supply zone, if the price breaks past this area, then to the left, there isn't a lot to stop the price until at least 97. And we could be seeing the dollar index and the strength of the dollar increase massively towards analysis, which I've already given. So zooming in a bit more, this area on the weekly is what I've been keeping my attention on. We saw an initial long at the beginning of the year, and we saw a reversal by March, which was causing the last leg of bearish activity. Now we've had the break above here, and now I'm looking for the return back down to the other side. So on this return here, the reason why I am looking for this return, I'm going to take off my markings just to show you where I'm looking at. This low over here, the price did not order book and return and reuse this area of supply as demand, which we haven't had yet. And so in the short term, I was looking at least the price to come back down here and give us a $91 mark. 91, seeing the price really start to take shape and start to reverse as we were discussing. If I go to the daily time frame here in more detail, we can see here that these lows especially are the lows I'm looking for, because this is a pool of liquidity that hasn't been run just yet. The price has been selling off, and it looks as though we're on course for us to see a weakening in the dollar. So temporarily, I do expect the price to weaken here. And what does that mean? So for quote pairs, okay, so for Euro USD, AUD USD, which are already shown very strong signs of bullish intention. If we look at what we have here, now it looks as though Euro USD is definitely on course to fulfill that. And for us to see the supply zone on the H fulfill that, that wasn't. Okay, so I am looking for a weaker dollar for this NFP result, and I expect it to be so. So if you want to know what's going to happen tomorrow, most likely, from what we're seeing from the structure of the price and from different financial instruments within the Forex market, US dollar ones, we're definitely looking more for a short than if the price was to reverse and do a strengthening on the dollar, that would be very interesting. Now, the tapering effect, I believe the market would need to have more speeches and more data release for us to have a great idea as to when. But it does look like OMO operations are going to definitely decrease. And but from the technical side of where they're moving money, it's very clear that the price wants to definitely go long for US dollar quote pairs. So I'm looking towards a continuation long from here, and equally with the NFPs, the price could do a surprise reversal, but that could end up being re-entries for the price to continue in the direction I believe the price is supposed to go in. So coming back here to the dollar index, let's take it a bit further. So on the H4 here, what have I been looking at now? This H4 here was a spike from the news, but it created a H4 demand zone area here, which the price used to go long to this highest point we've seen so far. We had a break beneath, and we've had 1, 2, 3 returns here. On the third one, if you notice very carefully, this is from the Jackson Hole synopsis. We saw a strong short, and this is because of the dovish sound that resounded from Jerome Powell during gave us a re-entry long, and now it's starting to continue short. And it looks like we're on track now to receive the short movement that we've been waiting for down to this area here. And I'm assuming that the price, even though there's a demand order block here on the H4, that the price actually didn't even return to, I think the body of the candle would close in this area, but we would get some spiking in here. And potentially the price may even do more and drop lower. Okay, but I definitely believe we are going to get down to around about $91 and the dollar index, which means for base pair Forex pairs, so USD Japanese yen, USD CHF, we should be seeing a short occur with them, which is what my technical bias without looking at this is. So speaking about that, let's have a look at some of these pairs. I'll start with USD Japanese yen. I haven't talked about it that much, but let's have a look and see what's going on with the US dollar versus the Japanese yen. And then we can make some calculations as to what we believe the price should be doing tomorrow. So at the moment, USD Japanese yen has been in a range of accumulation for the day. And it started really from near the end of the US session yesterday. We've just been seeing the price ranging, but what is clear is that we can see that on the bearish side of things anyway, the market is starting to, even though there isn't much directionality to this, there are lower lows forming here. And then at the end of this, on this side here, we have lower highs forming. All right. So one of these patterns here, or one of the patterns that you can derive from this, would be a triangle. Now, I don't trade triangles, I trade against them. Now, the market algorithm, if it's trying to develop a scenario for retail traders to be trapped into, it would be this one. So this triangle right here that we're looking at the moment, if the price was to manipulate traders to make them believe the price is going to break short, because this is quite an equilateral one now. If you don't know about retail trader patterns, an equilateral triangle means, in essence, that the price could either bounce and break out on the upside and go for a long, or it could break on the downside. Now, in a situation like this will cause uncertainty for retail traders, and they're going to have to make the decision as to what to do. Now, this range of accumulation here would be a very good market manipulation tool to get traders into accumulating long and short positions, which will be stop hunted, or the price can go for and run the stops for before or by the NFP point. Okay, so I would say, guys, I wouldn't try to take a short or a long right now. I'd rather let the market come to us and explain what it's trying to do. Okay, but from what I can see here, we have a retail trader pattern forming, which means mass manipulation for the long or for the short. Now we'll see what happens if the price starts to break long here. Then I'll be watching out, for example, for here. This is a nice area of demand that the price is broken beneath. So a return right here could be a good point where the price could start to break out long and give the illusion of, for traders, as though the price is going long, and then break down for the short. So this is what I'm looking at for USD Japanese yen. And if the price was to do this with the current pressure on the price, now, if you don't remember this, I'll remind you, when the price did this long here, there was a liquidity gap left on my chart, but you'll need to see it. You need the 30-minute to see it. So you see on the 30-minute here, guys, we have a liquidity gap that hasn't been filled yet. Now, this gap was created from the news about the core PCE indexes and about the CPI and also inflation. So, well, normal inflation. So that announcement that inflation was slightly higher had a strange effect on the price and caused the US dollar to actually gain strength. Okay. And at that same time, stock market prices were flying too. Okay. Because nominally people who are, bought into an asset, and then the inflation goes up, will cause the nominal value of that stock or the share price to go up. But anyway, coming back to USD Japanese yen, seeing this liquidity gap here, I do expect the price to be making its way for the short side. So I'm expecting, if the price stays exactly where it is, I think this is probably one of the most interesting trades for the week. 125.2 pips would be really where I'm gunning for with this. All right. Now, I would like to see how the price behaves first, but I definitely believe we're going to have this short. Maybe not the full short, but possibly something close to that fact. All right. I expect the price to really give us strong activity down to the short side. And potentially, now I'm on the daily structure for a moment because I want to have a look at this. On this daily structure here, I'm expecting at least the price to make its way down to the lows here and possibly even get down to 109 again, right around about here. So I'm going to keep my eyes peeled for USD Japanese yen. It's actually really brilliant in terms of what it means for us if we're going to be trading as the price gives us more room to make moves. All right. So on that note, let me look at gold and look at the opposite here. Now, gold has pushed short today. It's taken quite a while to do, but it has pushed short after being in a range of accumulation for a while. But I still do believe that gold is a long. And from the terms of liquidity gaps, if I think I can actually show you this on the H4, here we go. On the upside here, gold has a liquidity gap from the FOMC news from back in June that hasn't been filled out. From since that time, the price has never come back to fill it. And I do believe that there is room for the price to do just that. Now, at the moment, gold has really been in a range for 4 days. We haven't really had much break long or short. The lowest price point we got was just above 1800, which is a psychological level. And at the highest point right here, which is just after market open on Sunday night, we've had 1,823. So a 230 pip range, according to this, approximately, or 220 pip range. Now, looking at everything that's going on here in the structure of price, I'm going to put the supply zone right here. All right, this demand zone, actually, not a supply zone, is where really the price is holding in. And looking at what we have here with the price, we've just taken the low of the previous day. So the price could use this as a point to reverse from and start to go long, or we could see the price continue short. It really does depend on the factors of what the price is doing. Now, for me, I still believe in the bearish action to happen, but just not yet. But if the price was to go short, that would be very interesting. Now, I want to open your eyes to a bit of an interesting zone here that I've been watching. And is this H1 supply zone area here. So if we follow the price here, we had a strong short here. And then we had a reversal right here on the price. So after this reversal that we had here, the price pulled back to the demand zone that was formed. So I'll draw this out for you so we can map out the price here. And then the price has gone long from here and we've had a break above this area. Now we've had a return. So we've had the return the first time with the wick of the candle spiking here, but the body really hovering above. And we've had another spike here about 2 hours ago, but we haven't had any body close inside of this area. But if you notice, when the price was going long a second time here, so we had a short, first kind of major long after the reversal, and then second one, we had the price enter into this area and use this area of supply to push the price back down into demand. Now, when the price got here again, there was a very strong break above. So this supply zone, or the supply side between this price range, was broken. And so this area now should be an area of demand in terms of a flip from supply. So really, if there was a break beneath this range again, then I would be considering the fact that gold will go short. But if it doesn't and it can hold its ground here, then I'm expecting gold really to break past here and give us quite a few hundred pips on the upside. Especially once we get a break like this, then we should be looking for a long. Now, this week hasn't been that great. It's been kind of dry, even though there's been continuations here and there. So I would expect really the price to give quite a few pips on Friday. All right. So I'm going to leave this along here. And a second scenario here is that the price may decide to push down for lower areas of demand all across here and then refuel for another long. But from here, we have some interesting range here. So if you're trying to trade gold, I would say keep your eyes on these ranges, guys, and keep it in mind for you to be able to make some money on that. All right. Again, bearing in mind that the dollar index is indicating a weaker dollar, which means that gold versus the US dollar should be going to the long side. So Euro USD. All right, I'll pick one more here. Let's look at AUD USD here. Now, interestingly enough, AUD USD has done a crazy reversal. So cryptos had a crazy reversal on the 20th. And it looks like, so on 20th of July, all the cryptos started to reverse and do a massive long. On the 20th of August, all the crypto pairs that are paired against the US dollar started having crazy reversals. So from the 20th here through to now, we've done about 300 pips already, which is absolutely amazing. Now, AUD USD is recovered from the 71s back into the 74s. And from the looks of this, I don't believe that is even done going long. All right. Now, AUD USD to me from the monthly bias, I've discussed this before, but for those of you who are watching me for the first time who have never heard me speak, this will be helpful for you to have a picture as to what's going on here. Now, from the market structure here on the monthly time frame, we have an A swing. Here's the B, here's the C, and here is the D. Now, this cycle here that the price formed, when we had the coronavirus here, we had a wick close beneath the low, but not a body close. Now, this wick close was to fill out this price action here. So we had supply created here, and then we had a demand zone form on top. Now, when the price formed this demand zone, yes, we had an initial movement inside of here, but really what we should have had is we should have had the price return back into this point right here and then produce a long from here, but we didn't get that. And so it took quite a while. It took 13 years, but the price in 2020 found a reason to come back, and we saw the price spike back into this area here. And now we've had this return into a major area of demand. You can see the price is very free to go for a long. Now, really, I do believe this is going to go long, but the real breaking point would be when we see the market structure here broken on AUD USD, which it seems to be on track for. From this monthly time frame, if I just take a closer look, even though we're on a higher time frame, here's the major area of demand, which is it is demand now, but it was supply before, which caused this short. We had a break above and a return to demand here. And then so from the demand zone formed on top here, for following the price carefully, here is the demand zone that we've had in the last month, the spike back into this. So this is a very strong area of demand that the price can use to be able to push for a long. And we can see how strong this long has been. And it looks as though it is going to continue. So on the daily here, I'm going to put this out. On the daily here, one thing that has always been a question to me is that we've missed out on the return of this area here. Now, I still think the bias is bullish, but we haven't had the return back into demand. When this market went short, it took quite a while for the price to kind of make headway from this formation of the high, which was in May, 10th of May to be specific. We didn't have a return to supply here, and the price really struggled to make its way short. We had an accumulation here, which helped in the price to give us this short. So if I put this here was a range of accumulation. So there's a redistribution of money from this point here, which caused the price to push for a short. Now, without the accumulations, the price wouldn't have done much, but even then it wasn't substantial. And then the next major area of redistribution of liquidity was here, which produced a final short. Okay, but still, I believe the price was operating on not the strongest levels of supply that we could have gone by. And we didn't even get this return again right here. So I do think that this is on a very strong bullish train, and we could actually see the price do another crazy amount of pips in the future here. So with AUD USD, I wouldn't put it past the price to do a very good, continuation long. Now let's look at the hourly here and see what we've got going. So if I go to the hourly here, let's see. So the hourly right here, really we should be looking at continuation trades, but because the price has done so many pips, it'll be good to probably go to the H4. So where are we then? So on the H4, where are the major areas that I would look at? Well, the supply zones to the left, namely this one here. This is where we are right now. And it looks like the price is about to make headway to break above. Now, there are some highs over here, which the price could easily go for. And so I would be looking for a break and a continuation. Now, in terms of tomorrow, what the price could do. Now, the price feed didn't pull out this supply zone as well as I would like, but there is a nice little tight range here where we could create a little model here. So if we get a break beneath and then a spike return back here, or this would be a good break and return model that we can go for the price to continue giving us a long. And in terms of targets, when the price did go short, I did have a bit of uncomfortability here, which was because I didn't like the way the price went short and didn't return to supply. I was actually in the long before that happened, the drop. So I'd like to see at least the price return to this supply area here, which is not too far away. But from looking at the price here, we do have a large wick here that I believe the price will fill out right back up here. Now, AUD USD dropped quite drastically near the end of its phase, so I'm interested to see how it's going to recover back. Now, my famous H4 area, I'm going to leave this here. Here we go. This is my famous H4 area here. And, you know, looking at the price from this diagram of structure, there's so many different highs here and wicks and inefficiencies that the price needs to cover all across here. So for me, I do think that AUD USD, in terms of NFPs, definitely should be doing another, at least the price getting back to this area here, to be specific. I'm expecting AUD USD to get here at least. And if it can do the more, then the more would be back into this H4 supply zone at least. All right. And then we could even see the price make its way higher right back up to here. So for me, guys, looking at what we have going forward, we have an interesting week. I'm going to look at the news in a moment too. Let's have a look and see what the news has been saying. But really, when it comes to where we are right now, I definitely see the structure of price from base and quote side of US dollar pairs pushing towards the short side, or the weak, not the short side, but I would say the weakness of the dollar for now. Now, the weakness might not last forever. I think once the weakness plays happen, then we should see some dollar strengthening afterwards. All right. So let's just have a little look here and let's plot what we can do in terms of our trades. So if I come here to the famed FX Street economic calendar, on Friday here, I think some pairs will reveal their hands a lot sooner than others. And sometimes when there is the NFP news, which is dollar centric, it's good to look to see other currencies paired with that dollar that you're looking at that may have some news beforehand, because that would help to be able to produce a better idea. Now, the only pair that has news before the NFP results is, or has major news to be specific, before the NFP results is the euro. So what does that mean? If I was going to find a good picture or a good pair to choose for going for a re-entry, I probably would use the euro in this case, because we have retail sales at 10 o'clock. Now, remember, fundamental news is opportunity for market makers to be able to push liquidity or create scenarios for a coming large movement or anticipated movement. That's one use for them. So in this term, for example, with retail sales here, being high impact news to do with the European Union, one of the best things we can do is to use this news and see what happens at 10 GMT. So at 10 a.m. GMT, if the news produces activity which could cause a re-entry, then Euro USD will be probably one of the easier ones to trade with. So for example, if I was to translate that into how we would trade, if I come back here to the charts, so I would say, guys, if we're going to take now Euro USD, you have to be careful of why. If you don't understand how to trade, or you're new to trading, okay, and you don't have any good risk management skills yet, please don't try to trade Euro USD, because Euro USD is the most liquid pair, Forex pair in the entire market. It has about 25 to 26% share of all of the for financial or Forex pairs that exist. 25% is about $1.18 trillion worth of volume out of the 6 trillion per day. So there's a lot of money flowing between the euro to the US dollar. Okay, so number two, Europe and the US currency, Europe and the US currencies are both consumer currencies. The euro is a consumer currency because it's not backed by any commodity, because the economic infrastructure for Europe is a number of countries who together, their trade and services together, empower and modulate the strength of the euro by their general output. And the US dollar is the world reserve currency for the world. So it's a consumer currency. In other words, it's used to purchase commodities and other assets rather than connected to any sole commodity, compared to something like Canada, which oil is the main effect, has a heavy effect on the strength of the currency. So for that reason, data news will be very helpful for us to see what's going on with the euro versus the US dollar because of their standing. Now, in this case, looking at the scenario that's at mind, let's just say, for example, that the news comes out to be better than expected. Okay, for example, or worse than expected. Let's start off with worse than expected. So if the European data tomorrow at 10 in the morning is worse than expected, then that means Euro USD in this case, or if the European news is worse than expected, to be clear, just to make it so that I don't confuse you guys. At the moment, euro versus the US dollar, 1 euro is equivalent to more and more dollars, which means the euro is gaining strength against the dollar. If the retail sales comes out as negative, and again, the consensus is 4.8%, and the previous was 5%. So if it comes out to be worse, like let's say it's 4%, so it's really bad, then Euro USD will take a short dive. Okay, and that short dive may create a re-entry back to somewhere, for example, like here. And then the price may start to slowly take off. And then when we get to 12 o'clock, which is the US session, and US liquidity starts to pour in, then the NFPs might produce the opportunity to have the reversal. So the euro versus the US dollar is the best opportunity for us to see what the market is going to do closest to 130, because there's high impact news coming out from one side of the currency pair before the major one from the NFP. So we can use that news to be able to work out what's going on, and it should provide a re-entry that we can take into the US session for those of you who are trading from the morning. And then we may be able to, that from that point, then we can start to really make good activity or take good assumptions with the price activity that we see. All right. So for me, this is the play on Euro USD. Now, what if we have better than expected results? Then Euro USD will start to push on long. And if the NFPs are positive also, then it will push the price to where it needs to go, and vice versa. So we have a good opportunity here. So I'll say look to 10 in the morning, 10 GMT, and let's see what the price does from there. I hope you guys enjoyed that short piece, and I'll be back again tomorrow to cover the NFPs, and I'll catch you guys later on. So everybody take care and have